Our next guest analyzes Asian equities from very close quarters. James Sullivan, Head of Equity Research Asia, joins us on the show on the sidelines of the JPMorgan Summit from New Delhi, and Yatin Johnson to take the conversation forward.
Thanks for that, Neeraj. And James, this is Yatin from the Bloomberg Quint's Mumbai newsroom. And starting with the strategy, we have seen global equities outperform, and as asset class, equities have done well. But in terms of emerging market equities, especially India, do you think currently the valuations look stretched? And if not, then what is your strategy and approach to emerging market equities?
So we're overweight equities globally, and it ultimately all comes down to growth expectations. The global economy outperformed relative to expectations by 50 basis points in the first half of this year. Second quarter global GDP growth was 3.8%, which is the highest level that we've seen since 2010, which provides a very supportive backdrop for overall equity markets as we start to see earnings growth come through. So we're overweight global equities. Within that, we also carry a significant overweight emerging market equities position. We're seeing very good valuation support. 60% of stocks across global emerging markets are significantly cheaper than their U.S. comparisons. The majority of sectors across global EM also offer good value relative to the U.S. market. And we are seeing a positive growth differential in terms of emerging market EPS growth relative to developed market EPS growth. You add to that the fact that the conditions, in our impressions, are ripe for a continued weakness in the U.S. dollar, and it creates an almost ideal environment for emerging market equity outperformance.
James, talking about the short-term, impact, because in India we have seen a lot of reforms, GST, RERA, and a lot of changes which has happened in the last few quarters. But do you think from here on there could be some slowdown, and probably in FY18 and FY19 we could see some earnings cut? And what is the view as far as Indian equities are concerned in the shorter term?
It's a great question, and I would answer it in two different ways. Number one, it's valuations relative to what? And as we've just said, 60% of emerging market stocks are offering value relative to their U.S. peers, and so we do see very good relative value across the emerging markets. An additional concern is the directionality of earnings revisions. And we're still seeing very strong global positive earnings revisions across emerging markets. Here in India, we see good long-term prospects. From a short-term perspective, we are seeing the one-off impact of the GST and HRA impacting growth expectations for this year. So for fiscal year 2018, we've seen growth forecasts revised down from 18 to 14%. On JPMorgan numbers, we think that growth will be further revised down to something between 8 and 10%, which leaves us neutral the Indian market from a short-term perspective. That growth then does rebound back to 15% in the following year. And so the longer-term story here, I think, is very attractive. On a short-term basis, we're calling for a period of consolidation.
And James, one final question from my side. If you could tell us, in terms of sectors, which are the ones you are underweight on, and specifically if you could share your views on financials and pharmaceuticals, which have been seeing some bit of rebound, whether or not both financials and pharma, have you changed the stance?
Sure. So we're neutral the Indian market overall, but again, that's more of a timing conversation than a longer-term view. From a longer-term perspective, we still remain very constructive on the Indian economy and the Indian market as a whole. From a sector perspective, our biggest overweight position is in the financial space. We're currently running underweight positions in both healthcare as well as telecoms, as well as some of the sub-elements within the consumer space. We are seeing some weakness, particularly in rural consumption at this stage. So financials really stands out for us within the Indian market.
Taking out the time.